What a conference where we go from Hailey Bieber to venture capital.
I know, I want to sit like she was sitting. That was good.
Well, it's an honor to be with the Hailey Bieber of venture capital now. For everyone who doesn't know, I'm Alex Konrad. I'm a senior editor at Forbes and the editor of the Midas list of top VCs. We have a top VC right here in Sarah Tavel from Benchmark. Sarah, do you want to tell everyone who probably, if they're here, knows what Benchmark is, what Benchmark is?
Sure. We're an early stage venture fund in the Bay Area, focused mostly on being the first board member that a company takes on. That's normally the Series A. I mean, I could talk about some of the companies, but
we'll get there.
Just Google it.
So for any VCs in the audience or founders, I feel like seeing a Benchmark partner on a conference stage is like watching Discovery Channel and seeing the lion, eating an animal, and it's like they're both fascinated but horrified at the same time. One thing that I know about Benchmark is that you're always pretty deliberate. So for you guys, have you been as active in the market in recent months as you have been historically? Because what I've been hearing on the floor at this conference is that a lot of VC firms are like, we're not really doing deals. I had one VC come up to me and brag, I haven't done a deal in over a year. So that's not really the Benchmark way, right?
Yeah. No, I mean, we actually looked at this, I'm making it sound like there's like an analytics team at Benchmark, but really one of the partners just pulled it up, and we just saw that every year we're very, very consistent. You can see going back several funds, it's 1 to 2 investments per partner per year, and there's 5 partners. We range from 4 to 6, but that gives you a pretty good sense. And so then, last year, years before, during this kind of exuberance in the market, we were still that consistency, and so far this year, believe it'll be just as the same, if not a little bit more of a pace.
When there are only 5 or 6 of you, how would you say the venture game looks the most different from, some of these firms that these days look more like a corporation with, whole research teams or, Bain on speed dial, et cetera?
I mean, gosh, where do I start? It's people, I have the experience all the time when I talk to a founder and I say Benchmark's just 5 people. And the contrast, like what has happened is that we have stayed really this small equal partnership of this group of people, while all the other firms have gotten bigger and bigger and bigger and just pursuing a different objective function, which is, definitely a model of success that's different than ours, but a model of success in its own right. But it has made our product, I guess you could say, more and more different. We don't have a platform team. Like every other, founders are used to every VC coming in and talking about all the other services that they have at the disposal of, for that founder. But our perspective is that actually really is about giving leverage to the GP itself. It's not about giving leverage to the founder, and we choose to do something that basically doesn't scale. Like our, a mantra in a way is for us is like venture just doesn't scale, and we just have the 1 or 2 commitments we do per year, and then we try to work a lot with that founder to, hopefully unleash as much of their ambition as possible and help them build the best company possible. But that's a model that just doesn't have any leverage. And I would say that's like the Achilles heel in a way, is like we just have to be more selective. And we don't have a lot of people that are chasing all the seed funds, or somebody changes their LinkedIn and they get an email from a VC analyst. We don't have any of that.
And for the record, I think that was fake.
It could be.
If anyone knows the viral tweet of an AI founder, fake LinkedIn account.
Those types of programs have been around for a while, whether it was fake or not. It is definitely a system, a machine that other firms have built, where we have just chosen, and it's an active choice we make every year to stay the way we are.
Now, it's great to say that when things are going well, and maybe uniquely at Benchmark for a small partnership, you can always say that. But there have to be times where you all doubt that strategy, or see firms hiring people to do TikToks or throwing on big, beautiful conferences and kind of wonder about the downsides, right? And so how do those conversations go? And have you been close to straying from that? And if so, why didn't you?
I mean, there are certainly times, and I won't say no. Like, there were times during the last few years where you just saw these other funds getting bigger and bigger. You saw I would feel like I'd meet with, X number of companies a week, and a handful of them would be funded by, one of the bigger firms out there. Like, it was incredible, the contrast of our models. And during those times, you can't help but at least be paranoid. Mm-hmm. Are we kind of being too used to the way we're doing things? And how do we make sure that we're, founding Benchmark every year and being very intentional about those decisions? But it was, there were moments when it was tempting, and still, I think there's a lot of value in the equal partnership and, all the people around the table during those times of temptations to remember what it is, the work that we like to do, which is the partnering with the founders at this early stage, and then just saying, we tell our founders to focus, we have to focus too.
Now, I remember, it feels like a million years ago, but I remember the early months of pandemic lockdown. All the VCs were on Clubhouse, and reporters like me were chasing stories about hot new rounds for the next big photo sharing app or the next big social app. And I feel like Benchmark was in a lot of those conversations.
Yeah.
Either looking at those deals or maybe even actually leading a couple of them. Looking back on 2020, do you feel like that was a straying at all from that Benchmark way, or kind of how do you think about that moment where there were these mega hot deals into companies that in the case of Clubhouse and some have now kind of lost some of that relevance, at least today?
I mean, we have to play the game on the field, and I think we think to ourselves a lot, like, if we're not getting some investments wrong, we're not taking enough risk. And so I look at the investments that we did make in the last few years, like, are there some that we regret? Sure. But some of the hot social companies that, you and I talked about before would make those again, because you just, as Bill always says, you can lose one times your money. Mm. But the opportunity cost of saying yes and getting it wrong can be really, really high.
I totally hear that. I guess I'm thinking, the game of venture seems to have changed a bit in the last couple of years. When we had this, it's become a meme now on Twitter. There's, that feels like a zero interest rate, moment. Yeah. We saw a velocity of deals that was just, breathtaking, and diligence going a little bit out the window necessarily, prices very high. Is that a tougher environment for a Benchmark to play in, given your structure of the small equal partnership?
I think so, because we have you might even say, an unreasonably high bar for getting to yes. And so when our bar is staying consistent, and I hate to put it this way, but if you're in the mindset of deploying capital, inevitably what happens is that the bar does change. Mm-hmm. And so that created some challenges. I mean, every company I would meet for a period of time was coming in with 4 or 5, whatever number of term sheets already. And then you're having to make these decisions over a Zoom, over a small number of interactions. And again, our model, we spend a lot of time with the founders with whom we work because we don't have a platform team. We're doing the work. I do, 10 interviews, closing calls, recruiting calls every week, on behalf of my companies. And so when we say yes, that level of commitment is a super high level of commitment. There's nobody else to whom we delegate any part of that job. And so the bar has to stay where it is. And during that time, that became a little bit less comfortable.
Has the mix of deals changed in recent months, where maybe the companies that excite you the most, it's not as competitive yet, or are you still seeing a bunch of term sheets for kind of those type A companies that you really want?
Every company. The competitiveness hasn't changed. The valuations, have they changed? Yeah, maybe a little bit. But the biggest change that's happened is that you can actually get to know a founder. You get to know the company. You have multiple interactions, ideally in person. It's this amazing thing to do. And that's the thing that has changed the most this year versus the last few years.
Speaking of last year, I feel like last year this conference was a Web3 conference, and this year it's an AI conference, and I'm excited to see what next year is. But you spoke publicly, last year about Web3 opportunities, kind of leading a lot of that strategy for Benchmark, and you have made investments in that area. What would be your number one lesson learned from kind of that period, and what is your kind of current thesis compared to sort of the exuberance and excitement of the last couple of years?
For Web3 specifically? I mean, look, I was pretty public in my views on Web3, which was that we actually had a pretty strong reaction against a lot of the culture of Web3. We were investors in Bitcoin a long time ago. Zappo, Pantera, Bitstamp, one of the early regulated exchanges. My first investment at Benchmark is a company called Chainalysis in the crypto vertical SaaS space.
And you're still involved with that?
Still involved, still on the board there. And then we made two other, what you would call Web3 investments. Sorare, and part of the reason we love Sorare, it's a kind of fantasy sports with, you actually have an NFT that you can play for each player into the fantasy sports game. And then I invested in a game that's not yet announced. So despite being pretty actively looking into the space, really only made three investments during this time of incredible exuberance. And that felt, for a time, also really uncomfortable. But it just felt like the types of companies that were, it's hard to talk about all of them together, but there was a lot of energy around speculation. And there was a lot of euphoria around how quickly you would launch a token and then those numbers would go up. And it didn't feel enduring to us. And again, with the level of commitment we have, we really need to feel that these companies are focused on building an enduring company as opposed to something that felt too often a little bit more short-term. So I don't think I would change anything over the last few years there. Or maybe I would say I wish that the crypto market wasn't so consumed by speculation, because I still believe very much that some of the core primitives, the NFT as a core consumer primitive should be a new palette for consumer builders to build new experiences. I'm still hoping that there will be those companies. I'm still meeting Web3 founders, and I'm blown away by the level of talent that's still coming into the space. But certainly the burden of proof is on Web3, is on crypto builders to unlock these use cases, and that's what I'm looking for right now.
Somewhere a founder just re-updated their Twitter bio back to Web3 from AI. Yeah. So given those lessons and given kind of the slower, more deliberate pace the Benchmark takes, how are you guys thinking about this crazy AI, hype and excitement? I was speaking this morning with Scott Belsky about kind of how Adobe and these big companies are finding real uses, but then on the startup, side, it does feel like we're in this kind of primordial moment where things could go in a lot of different directions, and what startups would be the winners, is kind of hard to predict. So what would be the Benchmark high-level thesis? I
mean, very similar to how we always approach things with an incredibly high level of curiosity. I think that's one of the defining parts of our partnership. And so we are, with a high level of curiosity, spending an incredible amount of time learning in the space. But we haven't, just actually kind of like with crypto, we weren't just there right when whatever starts, some big moment. We were there very, very early and just more intentional. Similarly in AI, we were investors in Cerebras in I think it was 2016, DeepL in 2018. My partner Chethan led an investment in a company called MindsDB, maybe, I don't remember, 9 months ago. We recently made an investment in LangChain. The founders of PyTorch, the early kind of team from PyTorch, started a new company, investors there. And so we are being very active in the space, intentional. And I think the thing that we feel is that there may be a lot of overthinking that ends up happening in terms of where does value accrue, but there's no question that this is a very disruptive moment. Adam D'Angelo had this incredible tweet storm. I highly recommend all of you follow him on Twitter. He's been pretty fired up about...
For anyone who doesn't know, CEO of Quora and on the board of the OpenAI nonprofit as well. Yeah.
And he talked about how, AI, people think of it as a new platform shift, and that's underestimating the impact. That it, in his words, is more like the Industrial Revolution. And he talks about that, and I think that maps very much to the belief and optimism that we have right now for the impact that we're at the very, very, very early stages of starting to manifest.
Has your inbox gotten flooded with AI-themed pitches, however, that you have to kind of sift through now in a different way?
You make it sound like a chore. That's like the biggest gift you can give an investor is to have a founder send you an email with their company.
I'm sure the founders will be really glad to hear that.
No, always, always.
Speaking of founders, we probably have some in the audience. What is the vibe when you're talking to your existing portfolio? Are people stressed? Are they still kind of processing layoffs and kind of, getting through what is kind of a scary moment? Are they trying to move past that? What would be kind of the tone of your typical, founder heart to heart at this point?
It's a mixed bag. It's not, even the hard thing is that even the companies that are great have real challenges to figure out. I mean, so many companies, particularly the ones that had very early momentum, have raised money, particularly in 2021, at very high valuations. They raised a lot of capital, so they're not staring down the barrel of the end of the runway, but in a way that kind of inoculates them or protects them from having to make adjustments to their burn. And they're starting to ask those questions of, well, what do we do? How do we, it's not about how long my runway is, it's how long does it take me to grow into my valuation? And what's the length of that time? And then how do we be stewards of the capital that we have right now to make sure that we invest our balance sheet in the way that's going to drive the biggest return to investors, to the shareholders. And then you also have the challenge for the companies that did raise money, had too high of a burn. And it's almost universal that if you were a founder, if you were a startup, over the last few years, your burn was too high.
You put it to me eloquently before this. Eating at the Vegas buffet, something like that.
It's the way I think about it is like when you're. I'm a huge believer in focus. I don't know if you saw the Johnny Ive quote where like focus is when you wake up at 3 a.m. thinking about an idea that you're so excited about and you still say no to it because you have to focus on the thing that you are focused on. And I kind of feel like, in startups, my analogy is, you have to make something. And the thing I think, like you're making a chocolate croissant and you become like incredible at this chocolate, or the cronut, actually, like something new, you get the cronut, then you have to figure out how to do the distribution, but you're focused on this cronut. And then like over the last few years, this is a terrible analogy, but it became this thing of like, well, grow. And so then you start having companies be like, we should do cronuts, and it's like, we should do this, and we should do that, and we should do this.
You've been in San Francisco for too long. We've moved on to vertical croissants.
Oh, vertical croissant, perfect.
Yeah.
Thank you for making me current. And so you have this situation where then it's almost like you're a buffet in Vegas, and you've said yes to so much, and now the market has gone from like this mania to this like depressive feeling of having to bring the burn down, having to recalibrate the way you spend money. And it's so hard once you've already gotten used to saying yes to so many more things to let go of some stuff and get more focused.
Obviously Benchmark famously has preached caution. Bill Gurley has been accused of being a bit of a negative or kind of, cry the sky is falling in the past, historically. And I doubt these founders were hearing from Benchmark, go spend money. But undoubtedly, venture capital as an industry was putting that buffet in front of these founders, right? And so what do you say to a founder who feels whiplash here? Like, we spent money because you guys told us to, and now you're telling us that's bad, and we need to cut jobs, cut all this cost for us to raise money ever again.
One of my founders said this, and I loved it. He's like, over the last few years, we were building what people said was a great company. And that at the time, it's a little bit like playing the game on the field. At the time, that was a growth at all costs type mantra. And now, this is what he said, we want to be what a great company is now. And that means some hard decisions, but that's where we have to get to. And I think that is inevitably the way you have to, you kind of have to play when you have, especially in these competitive markets where everybody else is doing a land grab or spending a lot of money to grow, you can't, it takes an incredible amount of discipline, but also it may actually not be the wise decision not to play the same game, and it depends a lot on your competitive situation.
People may not know this, but I recently found out that Sarah qualified for the Junior Olympics in swimming. So when she says play the game in front of you, she probably knows what she's talking about.
And we were both rugby players, if you can't tell by,
A long time ago, we were both getting hurt playing rugby.
Yes, exactly.
As a final kind of word for founders in the audience, we've talked about kind of the tough part of this moment. What would you say is kind of your more uplifting piece of advice that you give founders right now, or how do you kind of make them smile at the end of your call?
Oh, there's so many things. One is, I think founders always forget how far they've actually come. As a founder, you're always in this, they call it the tragic gap, where all you can do is see how far you want to go, and you lose sight of what you've actually already accomplished. And so sometimes it's, holding a mirror up and just helping them see that. And then, for me, there's just so much creativity in the market right now that AI has unlocked. And just jamming on that a little bit can be a lot of fun.
Well, thank you for your wisdom, Sarah. It's been a pleasure. Thanks, everyone.